Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. I'm going to give you my financial opinions, and we're going to work through our way the dollar, 10-year yield, precious metals, and then go into the commodities and ETFs that I follow. A quick reminder, we do have a 5 p.m. Mountain Standard Time Sunday question and answer session. I hope to see you there if you're part of the community of the finding-value.com website. And you can use the word discount in the coupon code if you would like to join. So diving in here, let's start with the dollar. DXY, slightly lower today. Basically flat for all intents and purposes. So we're just moving sideways, consolidating above this long-term resistance line right here in the white. Our 10-year yield continues to move higher. We are at this support level in the blue. That's the big long-term downtrend line. This guy here, that downtrend line, we're right on top of it, sitting and just consolidating on top of it. So we do have, it does look to me like this is a bullish candlestick where we could go higher in yields. So yields look like they could continue higher here. We've got the 30-year yield also looking like it could continue higher. Nice little buying pressure there. And with that dollar being flat and yields going up, it's going to put a little bit of pressure on gold in the short term, at least historically. At some point, I think this correlation will break, fingers crossed, where yields go higher and gold goes higher together, much like the 1970s. But not yet. That correlation hasn't broken yet. Bond prices slightly lower. This does look like to me that this is going to go lower in prices. Higher yields, lower prices. This is a bearish engulfing where prices could go down. Looking at the TYX-TNX ratio, it's basically flat today. 10-year and 30-year went up together. The yield curve didn't invert or uninvert. It was relatively the same. The US 2-year up a little bit, 0.84%. Is my guess going to pan out here where we're going to go up, potentially creating another shoulder and then heading lower with a neckline like that? We'll see. We'll see what happens. Again, I don't know the future. That is a 100% guess there, but it is behaving like it's going to do something like that. So maybe we go up for the summer and then head lower for the fall or something like that. CRB index slightly lower today. We hit our head on this resistance area. We've got lots of resistance through here. We've got some good trading, good turning, bottoms and tops all over the place through here. We are heading a little bit lower, 0.41%, not the end of the world, just a small little down day today. CRB to S&P 500, basically flat as well. We've just been chugging sideways, consolidating for the ratio. So we're just moving sideways. Do we have a pattern here where we've come on down basically into a declining wedge and have broken to the upside? Kind of looks like it to me, but again, I'm not playing the short-term stuff here. I'm a long-term investor, but it does look like that is a possibility where we could be going sideways in this ratio. Gold lower. It's consolidating above its breakout. So we broke out, it's consolidating above support, and I think everything still looks absolutely excellente. There's that support level I'm talking about. We could even fall back down to 1930s, $1,900 is a possibility, and everything would still look good, at least in my perspective. So we're getting that pullback. We might continue to consolidate with the yields going higher this summer. So that's a possibility that we consolidate for a while to the, moving on to the right-hand side there in time. And we could go as low as 1930, 1900, even if it wants to consolidate that low. Silver following as well, down a little bit in silver. I still think we're consolidating. Everything looks good for a continued move higher on a bigger, longer-term view, and it's not looking all that bad here, guys. There's the longer-term view there. You take this guy and just hit these selling points through here, and we've broken to the upside. We could pull back to this area at 23.80 or so, 24-ish dollars, come on back, get some support, and then rip it again later on in the year, or a couple of months. I don't know the time frame, but our support's down here. We'll see if we go back, do a retest, and then rip it. Platinum's already ripping it. Doesn't look like it wants to wait. This is definitely a breakout of this area. The area that was getting hung up in. What we do is we look for all these reversal points. There's a ton in this area here. We rip through that. Now we're starting to release from all this pressure here. We're basically breaking out. It looks really strong. Hopefully the momentum can continue if you're long platinum. I'm sure if you're part of this channel, you know I'm very long platinum. But yeah, platinum's looking good. XAU to gold ratio pulling back a little bit, down 0.2% today. Again, that's with the market conditions. We're seeing higher yields. We have not broken out of this longer-term downtrend line, the trend line for happiness. We're still underneath it, and eventually we will break this and work our way higher. Give it a little bit of time. Maybe we pull back a little bit, go a little sideways, do a little dilly-dallying around before breaking out. We've got GDX down 1.32%, down a little bit more than gold itself. And there it is. Doesn't look horrible. It's not selling off massively or anything like that. Just small little down days. SILJ also down 2%. We could be doing a retest. I've talked about this retest, and it could be doing that, and then a rip higher. So there's your trend line. And we'll see what happens over the next few weeks. Crude oil up 0.52%. Are we going to get back here to about 75-ish dollars? It looks like we possibly could. We could even break all the way down to 73 if we want. And it would still be kind of a full retest. So I do think there could be some more downside here. We could even go back to 70 bucks if it wants to. And I would still say that's a decent looking chart. There's logarithmic. Okay, I don't like logarithmic. We're going off logarithmic. But logarithmic touches in there, and it's around this general area of $70. So it could bounce around here. The physical markets look actually pretty good for oil. We're still running deficits. Everything looks okay on that side. It's the recession worries, the credit worries and all that stuff that I think is impacting. It's the demand side, not the supply side. But we'll see what happens over the next few weeks. Natural gas down 1.11%, playing the ones today. And I still think we're consolidating. XOP, yeah, you know me, getting a little bit more selling pressure. Could we fall down a little bit more? I do think that is possible. What I don't like on the long-term chart is that we've got this trend line that we've broken to the downside. Do I hope that we hit $100 or so to create this other shoulder, head, shoulder, and have a buy point there? I do hope we get down there. That is where you can make a bunch of money. Are we going to get down there? I don't know. But that's where we could potentially go, is $100 if we start chugging to the downside. OIH down 1.77%. Again, a little bit more selling pressure. We could see further downside. I was talking about the larger selling pressure here and the struggle for this stock to go up higher, and we could potentially see it go down again. It's going down again, and we could see more downside in the short term for OIH. Sprott Physical Uranium Trust looks like it's trying to put something together. A little wick at the bottom there, a little bit of buying pressure. But again, I'm not doing anything. I'm just waiting in uranium. And maybe we get one last blast from the past to the downside, which would be the slingshot cheetah, if you guys are familiar with that. What happens is it gets everybody on the short side. It'll start to go down. Everyone goes short in here, and then it reverses back up and squeezes the shorts to the upside. That is the slingshot potential. It does look like this wants to fall lower in the short term for potential downside. URNM down 0.91%. We're still seeing some selling pressure through here. It is balanced, though. I mean, it's not totally selling pressure and that's it. A lot of the times what happens is you come down, you get a false breakout, and then you rip to the upside, the FBO, the false breakout, and then the slingshot to the upside. So that is, I don't know why this popped in my head. It's like, are you a part of FBO? Yeah. Are you part of FBO? Yeah, you know me. the hip hop, whatever it is. But yeah, that's what I see in URNM. Could be a little bit more downside pressure, selling pressure, that is. But the chart here doesn't look too bad. I mean, it's small candlesticks here today on the dailies. Are we going to get that false breakout? Again, guys, I don't know the short-term market movements, emotions. Anything can move this market in the short term. News, big long-term fundamental outlook. I think this is probably going to go up like that and then just rip it. I don't see the housing market weakness. I don't see that type of weakness where it's a deleveraging type event. I don't think it's going to be the big dog that just rips it all to the downside in a deflationary crash. I think that we've got excess crap in the system that needs to get flushed out, and it's going to flush this out, and then we're going to rip it. So we're going to get a pullback. It will be however long in duration. We're going to keep watching it together here on the channel, and I'll keep monitoring it, and then we'll see hopefully a nice big reversal candlestick, like a big bullish engulfing. That does not look like a bullish engulfing, but a big one, and we can see it. Hopefully it sends us that signal. TAN continues to move sideways, squeezing, squeezing, and squeezing. Copper getting a little bit more of a sell-off today. Again, there's no reversal candlestick up here. Maybe we're just doing a return move back a little bit. Again, I don't know the reasoning behind it. No one does. They just make up reasonings and people believe it. But a little bit of selling pressure here today for COPX. Same with lithium. A little bit of selling pressure. Could continue a little bit lower. And same with REMX. They're all in the same spot here. All getting sold off a little bit more selling pressure in the markets. Could this head a lot lower? It very well could, because we are underneath this support area. We've been underneath it, and now it's struggling to get above it. So we were above it here, and the lows just, it's lower highs and lower lows to some extent. So I do think there's a possibility of a washout coming up in a lot of these sectors. SPX, flat today. Again, we're right up on that resistance support level, if I can remember right. Right up on it. So that's holding on strong in relationship to everything else. Same with the NASDAQ. The NASDAQ's just holding on to this resistance support level right here, and we'll see which way this thing rips. Emerging markets down 0.94%. The dollar was basically flat, and it's just moving sideways. It's consolidating or doing whatever it wants to do. XHB, slightly lower. I still think this looks fantastic for a move to the upside. Could be bumping and grinding on its way on up. MOO, which is the agribusiness ETF, this still to me looks weak. We're underneath this resistance line. I still think we could see some downside in it, especially if the overall markets are going lower as well in a flag pattern type movement. Copper down a little bit today. That's also why some of these diversified mining companies kind of fell down a little bit. But overall, it's still sitting on top of support. There's that white line. Lots of buying and selling pressure in that zone. So we're sitting above support. Lumber, I don't know if lumber's been updating. It seems to be stuck on that. We're at 427. I had this problem with nickel too. I don't know why, but lumber's up 2%. Iron ore down 0.52. That one's still consolidating to the downside here. It's in a corrective phase. Well, we've broken out of this pattern here, and we usually come and do a retest, then we go higher. We'll just leave that there. Nickel up 1.78%, actually looking quite strong for a move to the upside for nickel. Looks good. Aluminum down a little bit. Still, this is just consolidating sideways. It's putting in a base consolidation zone to launch from. Baltic Dry Index up 4.37%. Still looking good. And we are still above the falling wedge. And I think we're going to work our way higher eventually. Newcastle coal down 0.4, still basing out. Let it base. Deep, deep, deep base. And then Ethereum down 5%. Wow, that's a little bit more aggressive. So we are getting some selling pressure here coming out of the markets. Same with Bitcoin down 3%, a little bit more selling pressure. Maybe we get a back test here for Bitcoin and Ethereum. We can throw, let me see here. We've got a support zone through this area here, so maybe we come back to that support zone there. Hit it here, hit it there, hit it there, hit it there. It's all around that general vicinity. So maybe we go back and do a little bit of a retest in that general area. So that's what we've got for today, guys. That's what is going on in the commodity bull markets. Yes, we're still in a bull market. Yes, we could go lower in the short term. I know that seems counterintuitive, but things don't go straight up or straight down. Are we going to rip higher in oil after hitting $75, $74, $73? We're going to have to wait and see. Are people getting scared of potential crisis or something? Tough to say. I don't play the short term. I play the longer term. I know some people they say that's an excuse because I'm not a short term trader. I don't know. I was never that successful in the short term. I've been wickedly successful in the long term. So that's where I'm going to stay. I'm going to stay in my swim lane of success, not go on the short time frames. And I'm just looking for buy-in points. I use ratios for the most part for my buy points, and then I just hold on. Yeah, I go and I do this. I know a lot of people want the daily market updates for the short-term price movements. I've done very little short-term price movement trading historically. I mean, I've done some, but I've gotten pretty good buy points on the longer-term, medium-term time frames. Have I bought at bad locations? I have, and what saves my butt is time. If I screw up a purchase, maybe it's emotional based. It happens to the best of us. I can use time to basically ride through it, and the ratios and value is at my back, which is good tailwind. So if I've got good ratios, good value, and then I just wait it, generally I make money on it. It just takes a little bit of time. A little bit of time can be years. I know some people say, "Oh, it's the opportunity cost." I don't know. I've made some pretty good gains in some of the areas, 10 baggers, 20 baggers, stuff like that, and that all takes time. It doesn't happen in 3 months or 4 months. It generally happens over a few years, or maybe even 5, 10 years. So that's where I get the returns. I'm not trying to play the short-term little market movements. I know people use the short-term market movements to justify a thesis that they develop. You have to make sure that your thesis is correct, and you have to make sure that the market movements can be attributed to the thesis. In the short term, since market movements can happen by anything, it's tough to justify a thesis that is correct or wrong, because markets in the short term basically move on random movements. So you're charting the fundamentals on a longer term basis, and you're charting human emotions on the short term basis. So the short-term basis, human emotions, you can, hey, I want to buy this, and then the next day you don't want to buy it. It's cold feet. Things can change very rapidly in the short term based off of emotions. But long term, it's the fundamentals that are basically supporting the underlying thesis, or the underlying market dynamics in the market is going to price these things either up or down. The things that you have to watch for the underlying markets is a couple of things. Are we going to expand credit? And the reasons why. If the answer is yes, because we've got a debt cycle that's ending, and because we have the millennials coming to home buying years, which is going to expand that, then yes, it's going to expand credit. And you're going to have cycles in this big secular bull market that's going to go counter to the bull market. Are we in that area where something's going to go counter? It's possible, because if you look at yields, we could see yields come up and then roll back over. Usually when they roll over, there's fear in the market. or it doesn't roll over. Yields continue to go higher because the supply of yields and the new issuance of money that needs to be raised by the government continues to increase yields or interest rates. That is another possibility, which is the supply and demand of bonds. So we've got a lot of things going on that we haven't seen historically. We haven't seen the end of a debt cycle in America for a very long time. We haven't seen a paradigm shift in 40 years. 1980 all the way till today, roughly, we've been in a declining interest rate environment. Now interest rates are going up. So a lot of things are changing. A lot of things are new to the market. And I think a lot of people need to digest all this stuff. And yeah, that's basically my opinions around it. If you guys like this content, give me a thumbs up, subscribe to the channel, subscribe to the website. I'll see you guys Sunday. We'll talk about all this stuff. And don't forget about it. And we'll catch you next time. This is Finding Value.